Hey traders and investors, it's Thursday, May 1st. Got lots to cover today. I'm going to talk about the price gap from yesterday with panic selling and the rally back. We've got a big gap higher today with Microsoft and Meta both having big earnings, up about 10% this morning. We're going to touch on what's going on in terms of seasonality with the SP 500, what to expect. It's not the sell in May and go away as most people, I think, expect. Also, seasonality for gold, what it is showing gold is going to do from here. And I want to touch on what's going on with hires, both in just the overall United States market and the private sector, and what's going on with the commercial mortgage-backed securities, which is, I think, about to explode even higher from where it already is. And of course, how that's going to carry over into more or less real estate and real estate pricing going forward. So lots to cover today, along with all the normal assets and Bitcoin, all of that stuff to follow. Lots of volatility in the markets today, positive volatility. We're seeing the markets pop, mostly the large mega caps. We got the NASDAQ up 1.9%, the SP 500 up 1.25%, the Dow up 1/8, and the Russell up 0.6. Now, the big moves, I think today, money's flowing into tech, flowing into the large caps. We are seeing, if we take a look at Microsoft, big move in Microsoft with earnings last night. You can see it's up about 10% or so. That is going to up at 428. So big move up in Microsoft, helping lift the indices. We also had Meta come out last night, and we've got a big pop up about 7% or so for Meta at 584. So somewhere way up here. So we're definitely having a big pop with some news and earnings here, creating a rally in the market. Now we are seeing a bit of a broad market. We do have the Russell 2000 up in the Dow as well, but definitely it is a large mags type of move. If we look at the Magnificent 7 in pre-market here, the mags are up in general, up pretty nicely, roughly about 3%, 3.5%. So that's dragging the indices up. So where else is money flowing today? So money is flowing more or less into stocks. We are seeing bonds move a little bit higher, building a tiny little bull flag pattern here. Definitely, we've got a lot of moving averages all kind of clustered together. So definitely a mixed, volatile market when it comes to the bonds. But overall, we have money flowing into stocks. We do have money flowing into the dollar. We're starting to see the dollar try to carve out this little baby inverse head and shoulders, a little potential bottoming formation. It's on the verge of potentially popping and having a bigger push to the upside. So money's flowing into the dollar, and we're seeing gold and silver dump out and move lower, which is no surprise. We saw this 100% measured move to the upside. We have this bearish pattern, this Fibonacci level right here, showing that we should see gold potentially pull back to 3140, somewhere in this area, as just the normal bear flag pattern. Again, simple bear flag pattern is you've got the flag pull down and then price flag sideways, and that's the halfway point, and then you have the second half of that move down. So money's flowing, coming out of precious metals and moving into stocks with, I guess, earnings, sucking money out of those, out of the defensive plays and into the more aggressive ones, like tech stocks today. Silver down 2.33%. It's pulling back a little bit more. It's had a few down days here over the past week and selling off. If we take a look at gold miners and silver miners, they're all pretty much the same. They are set to open sharply lower, 47.50, 47.50. So they're going to open down pretty much just below these lows, which again, this is very similar to gold. We got the bear flag pattern, which is the halfway point, and the second half of that move will be down here if they unwind in that way. And this is where gold and miners like disconnect, or more so miners. The stock market's going to rally today, and gold miners are going the opposite direction. So this is what makes trading precious metal space so difficult, is you don't know if gold miners are going to rally with the stock market or go in the opposite direction. And so for a perfect example today, stocks are up sharply, and gold miners, which are a stock, are actually going the opposite direction and selling off. So that is the extra wild card. Where trading and investing is hard enough, but you throw in an extra wild card where it can decouple randomly, then it definitely adds a whole new twist and lower odds of being able to pull consistent money out of that market. So it's definitely a tougher one. If we take a look at Bitcoin, Bitcoin up 2.5% this morning. Again, we've been talking about this tight bull flag pattern. It's picking up some speed to the upside. And it looks like it might want to push all the way up to this 105, 106 area. And the monthly chart may start to firm up and look like it could have a decent move for a big move up to about $135 per Bitcoin. But again, that's going to depend on how Bitcoin moves. It's a lot like precious metals where it can move with the stock market. If the stock market rallies, Bitcoin could rally. But we could also see the stock market collapse and Bitcoin could go higher as well. So it keeps flipping and flopping between moving with and against the stock market. And it is acting a little bit as a defensive play over the last little while. But today we're seeing it move higher along with the NASDAQ again. And it has had a very close correlation to the NASDAQ over the longer period of time. So that is kind of still the odds. So if we do get a stock market rally, risk-on rally, people moving into aggressive stocks, we'll probably see people move into aggressive plays, other assets like Bitcoin itself as it pushes higher. So just to jump back to the 30-minute chart, I shared this last night in the evening update as well, but this is the 30-minute chart of the QQQ, but the SPY is the same. We saw a big gap open lower yesterday. And gap with panic selling. Usually gaps get filled when we have panic selling spike over the 3 level. We also tend to see the market rally because this is where people dump out of shares. So yesterday at the open, we saw that big gap down. We saw panic selling, which means most people just dumped their shares. They thought the markets were collapsing. And after we have that set up, usually we see a market gap get filled, this gap window, this blue window here, get filled. So gaps get filled, and panic selling usually means everybody's who's going to dump shares have just finished dumping them, and then the market takes off without them. So we had that move yesterday, and these dips are being bought back up. The general masses are in buy the dip mentality. A lot of people have been involved in the markets really since after 2008, and they've never been through a stage 4 decline. They just know that if you buy every dip, eventually you'll be in the green. Eventually, one of these dips though is going to be a multi-year correction, and you lose your shirts. And that's what I believe we're going into. But the buy the dip mentality is still saving this market. It is pushing higher. And it is possible that we actually have a new trigger in the markets with our strategies unfolding here that we need to be aware of. Another interesting thing here is I overlaid the Google search trends for inverse exchange traded funds. And it's pretty interesting. This big red gap down day, the market had a huge gap down. It sold off dramatically. This was a Friday afternoon, and we shared this in the video. We talked about this saying, this is a Friday. It closed near the lows. Everybody's going to stew on this over the weekend, and we're going to see a huge gap down probably on Monday, a final flush out of everybody dumping their shares, and we're going to see a panic selling indicator spike, which we did. And then the market's probably going to try and put in a bottom. And what's crazy here is that morning, that day, that huge gap down, everybody was panicking. And we're like, it was a signature type of move. The inverse exchange traded fund term spiked. I had to squish this down, but this is a huge spike in how many people were searching it. And it's funny how, our sentiment indicators and how we follow this is what I try to share with you is like people are going to be panicking at the open. It's going to feel like mayhem. And everybody's going to run for inverse ETFs, and they're all going to buy an inverse ETF, and then the market goes the opposite way. And we're starting to see the opposite right now, where people are actually loading up on leveraged long ETFs, expecting a bull market to start. And generally, bottoms are very violent. Tops can drag out for a long time, meaning this market could continue to meander and work its way up 4, 5, 6% still over the next month or so, and continue to put in gains. Upside trends and tops are dragged out for very long periods of time. Bottoms are usually very significant and quick, and a little bit more pronounced in terms of what causes that. So it's just interesting to follow the sentiment. As I mentioned in a video a while ago, a couple days ago, is sentiment is so important to understand. It's almost as important as volume on price action of the chart. And of course, these indicators, these FOMO indicators that we have, these FOMO and panic selling, these all tell us like what's going on in the markets when we have short-term overbought markets and they pull back, and we have panic selling and the market bounces in the equities markets. So that's kind of where we stand right now. Is just these markets are starting to pop. This is the QQQ. You can see it moving up here today. The futures continuing its move. It has this bull flag pattern pointing to higher pricing. Hey guys, a quick reminder, if you're watching this video right now and you're not subscribed, make sure you just click that button right there and hit that red subscribe button underneath the video and click the notification bell. That way when we post something and there's something that is urgent or a fresh update, you'll be one of the first to see it and you'll be ahead of the markets and ready to take action. 43% of you guys watching this aren't subscribed, and it just takes one click and you'll be following the bandwagon here and following along the markets as close as we can to make sure we avoid market crashes, benefit from market crashes, and also benefit from rising pricing as things turn up. So make sure you subscribe and share with your friends if you like the content that I'm sharing. And of course, I am reading your comments and I am trying to add in questions that you guys have and work it into the content so that you guys can learn as we kind of navigate these markets. So let's take a quick look at the SP 500 seasonality chart. Typically we see the market usually wants to rally up through May. A lot of people think when May hits, it's like sell in May and go away. Really, it is like May is kind of near the major top and then it sells off. 2 years ago, the markets moved just like this, the SP 500. So overall, in May here, we could see the markets were obviously May 1st right here. So we could see the markets move up for the next a week and a half or so. Maybe there's a bit of a pullback. Maybe they push higher into the beginning of June. After that, we kind of go into the summer doldrums and sell off. So and that would bode well with where we are. Remember, we're looking for this dead cat bounce rally, which gives us about a month of upward price action. And then we're going to go into a big sell-off, which will be the rotate of that right-hand shoulder to the downside, and the bias will naturally be sellers. And then we'll probably have some type of bounce, probably be a lower high on the market. But anyways, that's where we're at. We're in kind of a bit of a rally phase with the stock market in terms of seasonality-wise. Even though everybody says sell in May and go away, it doesn't actually mean May is the top. It just means May is, getting close to the top. And it's more so just a rhyme everybody loves to say. If we take a look at gold, here we are. Gold has been moving higher. It has been, even though the trend seasonality-wise has been down, and that's because gold is in favor. It's in a bull market phase. But we're about to turn into May here, and it's probably going to see another leg down into July or August. So gold definitely is now under the gun a little bit. And it might actually start to put in that big top that I talked about over the past couple of charts. I shared it, how the big significant gold has that blow off phase, which we're in, and it looks like it may have put in a top. So gold is definitely going to be walking into a weaker market seasonality wise, and the stock market is moving into a bullish, which makes sense. Money's flowing out of gold. That money is now going into the risk on, which are stocks, so people can try to make money, and that's where the money's been flowing over the last few sessions. If we take a quick look at crude oil has been under pressure for quite a bit here. We've seen a few things pop up on the chart here. We've had, obviously, crude oil has been in a downtrend. We've had red bars mean it's in a downtrend. Here you have a counter trend rally, almost a little bit of a double top here. These two S's, these two SS's, these are signifying, a sell short signal more or less, and the oil continues to move down. So we're definitely in this breakdown zone below this 65 level. Let me just quickly pull this up. We got the 65 level in oil, which if I can just get this to recalibrate. What's going on here? There we go. So oil moving down. Obviously, we've talked about this so many times, saying, hey, when this level breaks, we talked about it way back over here, saying when oil eventually breaks 65, it's got to break it in a big way. And if it does, it's going to be a leading indicator that the economy is coming to a grinding halt. And price action leads fundamental, leads news in most cases. And oil breaking down, once it did, we talked about how, okay, it's just a matter of time now. We're going to have some bad economic data. And obviously, if oil breaks down, that means there's going to be less supply, demand. I mean, we're looking at, there's a lot of interesting things unfolding here. There was a clip here about, what was it? In the U.S., tourism in the U.S. here. We've got Canadian flights to the U.S. is down 70% from the same time last year. Overall, people traveling around the world going through the United States to continue on is down 20%. People are boycotting the U.S. and things are about to get pretty ugly. Less travel means less fuel. We're also seeing the transportation companies down, both sea freight containers and trucking. So there's a lot going on. Definitely going to slow things down, and that means there's going to be a lot less demand for oil, which is why oil has already started to fall. Again, prices fall before the data usually comes out. It's simply investors are smart. They can put two and two together, and that's what we've been seeing and watching and letting unfold. And we're not really that surprised with what's going on. All right, well, let's take a quick look at a little bit of economic data. This is all stuff we've been covering. I touch on every few weeks or so or every month just because it's pretty slow updating data. But the reality is, look at the hires in the United States, the 3-month average. Companies are just not hiring like they used to. It just continues to fall. We're way back down at levels from 2016, 2017, meaning there's just not that many people hiring jobs. I meet with a group of people in Las Vegas every few months. Of investors, or more so entrepreneurs who own businesses all around the world. And they're all the same thing. The private sector job openings, they're all trimming and cutting, and they're pretty much just using contract workers. And they're just really getting as streamlined as possible because they see and they feel everything coming to an end. So jobs are starting to fall. It's harder to get a job. And again, if we move over to where we are, look at the commercial mortgage-backed security delinquency rate. It is skyrocketing high. There is going to be a bloodbath in the banking system with all the banks and commercial real estate. Like, we're at a crazy nosebleed level that really took a long time to happen after the 2008 financial crisis. The real estate market, bottomed out a lot later than the stock market. And we're already way up here. This is 11%. I think we're going to see this spike much, much higher. And it is going to be painful for anyone holding banks and things like that. If we take a look at home pricing in the South, the amount of houses for sale, we are above the 2006-2007 peak, meaning there is huge supply. But the thing is, nothing is really selling. Everybody's just holding tight. Nobody wants to lower their price for their house. And this is a chart I like to show because it really shows a good picture here. Obviously, this could be a giant bull flag pattern, and we see home prices skyrocket and go up another 50%. Or it is a major topping pattern, and it's about to break down and unwind on the whole COVID move to the upside, which I believe is starting to happen. We're already starting to see some spikes down of the average single median price start to break down, and it's just going to break a tipping point. I think we're going to see it probably this spring. People are going to realize when they go to sell their house, there's so many for sale. People have pick of the litter, and there's not a lot of offers going out. And I think people are going to lowball, and we're going to see the price drop very dramatically down in here. And we're going to see a huge correction in price. So lots of stuff's coming together for a correction. And my belief is once the housing market starts to collapse, that's going to hit most people the most in the pocketbook. They're going to realize they're not as wealthy as they thought. People look at their house value and they're like, oh, I'm a millionaire. My house is worth so much. But when they realize it's worth like $200,000, $300,000, $400,000, $500,000 less, or depending where you are on that scale of the value of your house, when they see their house value dropping, they're going to feel like they're losing a lot of money and things are going backwards. And if their stocks are going down as well, that's a double whammy punch. And who knows, if bonds go down, that'll be like a triple trifecta move to the downside. So there's a lot of negative things unfolding. And again, we're just looking for this kind of dead cat bounce in this stock market. Usually the first bounce and rally within the stock market can be tradable. It can drag out for a little while, a few months. But overall, eventually we're going to resolve to the downside, I think, and see a big move down. And that's kind of where we stand. I know this video dragged out a little longer than normal, but wanted to show some of that data. The momentum is shifting. It looks like we've got, people are starting to move in to the markets. They're buying this bottom, driving it up. And the bias now is there is a new bull market. In fact, the search term for a bull market has spiked. So everybody's thinking there's a new bull market starting. And the reality is, if everybody thinks a bull market is starting, then I don't think the bottom is in. I don't think we're starting a bull market. So we'll see how all this unfolds going forward and take it one bar at a time. Anyways, that's it for now. Take care. Bye-bye.